Bull Bear Buzz Podcast for decoding markets, fueling minds. Welcome to the Deep Dive. Today we're really zeroing in on Adani Enterprises Limited, AEL.
That's right. We're going to take a close look at their recent performance, their strategy.
Exactly. We've got their Q4 FY25 earnings presentation and their audited consolidated balance sheet as of March 31st, 2025.
Good, solid sources to dig into.
Yeah. Our mission really is to pull out the key insights. You know, what's going on with their activities, their focus areas, and their financial health.
Give you a clear, concise picture.
Okay, let's unpack this.
Well, first off, the scale of Adani Enterprises is pretty striking.
It really is.
Decades of growth, mainly built around infrastructure and utilities, but it's expanded so much.
A very diverse portfolio now.
Absolutely. When you look at the structure, it's a whole collection of different companies.
Let's list some out. So in energy and utility, you've got AGL Renewables, AESL for T&D, ATGL2 in gas distribution, APL IPP for power generation.
And transport and logistics.
Right. APSEZ ports and logistics, AHL for airports, RTL doing roads.
And they're pushing into new areas, too.
Yeah, the new industries bucket. ANIL, that's the green hydrogen ecosystem.
Very topical.
Adani for data centers, ADL in digital. And don't forget AWL in food, FMCG.
And the presentation notes the Adani family's equity stakes in these, plus AEL's own stakes in the subsidiaries.
Right. Those percentages vary.
What's really interesting, I think, is how AEL acts as an incubator.
Developing businesses.
Yeah.
For value creation.
Exactly. They build them up, operate them, and their track record is quite attractive, actually.
You look back, like 2015, they already had APSEZ, APL, AESL established.
Right. And now by 2018,
AGL, the renewables arm, and ATGL, the gas distribution, they were added.
It shows how these businesses kind of grew up within AEL. And
they say this model has worked for shareholders. A CGR of, 31.2% over 30 years?
That's the figure they state, leading to a market cap of USD 31.3 billion, though, market caps fluctuate.
Of course. Now, this green hydrogen ecosystem, ANIL, that seems like a major focus.
It really does. And what's fascinating is the integrated approach.
Oh, so?
They're not just doing one part. They want to manufacture everything to get low-cost green hydrogen.
So from the very beginning, like silicon ingots and wafers for solar.
Exactly. Ingots, wafers, cells, modules. Then also the wind turbines and, crucially, the electrolyzers themselves.
Wow, that's end-to-end, really aiming for cost control.
Definitely seems like the strategy. And this focus on tech isn't just hydrogen.
No, they mentioned upgrades across the board for efficiency, like TOPCon and solar modules.
Right, that's a higher efficiency cell tech, and OMCCC in their road projects.
Optimizing construction and maintenance, I guess.
It points to a consistent theme,
Yeah.
Using tech to improve operations and stay competitive.
Makes sense. Okay, what about the money side? Capital management.
They talk about an efficient capital management plan aligned with their philosophy.
And they give a key metric. Net debt to equity.
Yeah, 0.9 times in FY25.
So less debt than equity, generally seen as a more conservative leverage position.
Provides a bit more of a financial cushion, typically.
Now, how these different businesses actually operate their models.
Looks like they tailor it. For ANIL hydrogen, the data centers and roads, it's mostly B2B.
Business to business, serving other companies.
Right. But then for airports, AAHL and the digital arm, ADL, it's more B2C.
Business to consumer. Makes sense given the customer base.
Yeah, airports serve passengers directly. Digital often targets end users. The others are more infrastructure plays for businesses.
Okay, let's zoom in a bit. That integrated wind manufacturing within ANIL, any specifics there?
They reported quite a bit of progress. Supplied 60 WTG sets, wind turbine generators, just in Q4 of FY25.
60 in one quarter.
Yeah. And they hit a milestone, the 200th blade set and nacelle produced.
The main turbine components?
Exactly. They've also expanded the facilities, reaching a capacity of 450 WTGs per year.
That's a big jump.
It is. They also won an ICC Green Urja Award back in Feb 25.
Okay.
And got ISO and IATUR IEC certifications. Those are important for global supply, quality standards.
So they're aiming beyond India.
Looks like it. And the supply numbers show growth too. 54 sets in FY24, up to 164 in FY25.
Quite an increase.
And they mentioned dispatching that 200th blade set as well.
All right. What about the data centers? Adani or ACX?
Huge ambition there. 1 gigawatt platform by 2030. That's a lot of capacity.
Supporting India's digital growth, presumably. Where are these centers?
All over. Navi Mumbai, they've started execution on a 30 milliW building.
Okay.
Pune has 2 sites, Pune and 2, Phase I nearing completion, about 9.6 milliW each.
Hyderabad.
Phase 1, 9.6 milliW, is operational. Phase 2, same size, is well underway. Construction and structural done, MEP about 38% done.
MEP being mechanical, electrical, plumbing.
Correct. Noida has 50 milliW core and shell, plus 10 milliW MEP operational, and they've started on over 40 milliW more MEP.
And Chennai.
Phase 1, 17 milliW operational there.
Reliability is key for data centers. Any word on that?
Yeah, they highlight 100% uptime in Chennai, Noida, and Hyderabad. That's crucial.
Definitely. And they have orders.
A big order book, over 210 milliW mentioned. Locations span Noida, Chennai, Mumbai, Pune, Vizag, Mundra, Hyderabad.
Got it. So, wide geographic spread, focus on uptime, strong demand.
Seems to be the picture.
Okay, shifting gears to transport and logistics. Adani Airports, AAHL.
Right. Portfolio of 8 airports. They claim it serves about 23% of India's total passenger base.
That's a major share. Which airports are these?
Mumbai, plus the new Navi Mumbai one that's under construction. Then Ahmedabad, Lucknow, Guwahati.
Thiruvananthapuram, Jaipur, Mangaluru too.
Yep, those are the 8. Capacities vary a lot, obviously. Mumbai's huge at 55 million passengers capacity as of March 24. Mangaluru's smaller at 2.5 million.
And they're adding routes.
Mentioned 12 new routes, 8 new flights. They also talk about leveraging a 300 million plus consumer base for a network effect.
Makes sense. Did they share performance numbers?
Yeah, the presentation has detailed tables, passengers in millions, ATMs, that's air traffic movements, in thousands, and cargo in lakhs of metric tons.
For each airport?
For each of the 7 operational ones, yeah. Comparing Q4 25 with Q4 24 and the full fiscal years, FY 25 versus FY 24, shows growth, but it varies by airport and metric.
Okay, comprehensive data there. Now, still in transport and logistics, but roads, RTL.
Adani Road Transport Ltd. They've got projects under different models, HMM, TOT, BOT.
Hybrid annuity model, toll operate transfer, build operate transfer.
Exactly. The presentation lists them out: location, length, financial closure status, project completion, concession period.
Where are these projects?
Operational HM projects in Chhattisgarh and Telangana. Under construction HAMs in Andhra Pradesh, Madhya Pradesh, Kerala, Odisha, Maharashtra.
So quite widespread. What about TOT and BOT?
1 operational TOT project in Gujarat, an operational BOT in West Bengal, and 1 BOT under construction in Maharashtra.
So a mix of models and geographies.
Yeah.
Spreads the risk, I suppose.
Yeah, and lets them tap into different kinds of road development opportunities across India. The completion percentages show ongoing expansion.
Right. Okay, let's turn to primary industries mining services.
Here they provide volume details, production and dispatch in million metric tons.
For which mines?
Various ones. PKB and Garipalma III in Chhattisgarh, Talabira in Odisha, Suliari in Madhya Pradesh, Parsa in Chhattisgarh, Kurmitar in Odisha.
Serving clients like RRVUNL, CSP, GCL, NLCIL.
EPMDC, OMC, yeah. The key takeaway is that total volumes, both production and dispatch, saw a significant jump from FY24 to FY25.
Okay. And they list the specific contracts.
They do. Operational mine service contracts for coal and iron ore, details like mine name, state, peak capacity, the customer who owns it, and the SPV involved.
SPV being the special purpose vehicle, the specific company entity.
Correct. Good transparency on their operations there.
They also mentioned commercial mining.
Yes. Separate from just services. Domestic commercial mining contracts. Mines listed in Jharkhand, Odisha, Maharashtra, Madhya Pradesh, Chhattisgarh, again, with peak capacities and SPVs.
So expanding beyond just service provision.
Seems like it, taking on the mining operations directly in these cases.
Now, something increasingly important, ESG. Environment, social, governance. How are they rated?
It's a mixed bag, which isn't uncommon. ESG ratings can vary quite a bit depending on the agency's focus and methodology.
Great. So what did the report say?
Okay. DJSI CSA for 2024 gave them a score of 60, ranked them top 5 globally in their sector, 97th percentile overall, very high score on the social dimension, 100th percentile.
That sounds strong. What else?
CDP gave them an A, which is the leadership category for climate change efforts.
A is good.
TPI, Transition Pathway Initiative, rated them level 3. That means they're integrating climate change into operational decisions.
Okay, so progress there. Any lower ratings?
Well, Sustainalytics assessed them as high risk at 33.4, though that was an improvement from 34.3 previously.
High risks, okay.
CRISIL, which is a SEBI-registered agency, rated them 50, which is below average, although, again, an improvement from 48.
And MSCI?
MSCI was CCC. And another one, ESG Risk Assessment and Insight, gave them 67.5, calling it strong.
So quite a range. Top rankings from some, lower from others like MSCI and Sustainalytics, improvement noted by a couple.
Exactly. It highlights the complexity. You need to look at the trends and the specifics each agency focuses on.
They also mentioned an irrigation project.
Just briefly, the EPC Shakar-Pench Microlift Irrigation Project in MP, potential for 95,000 hectares, but forest approval is still in progress.
And they laid out a whole ESG framework.
Yes, quite detailed. Starting with a vision statement. Something like being a world-class leader, enriching lives, building infrastructure through sustainable value creation.
Pretty standard vision language. What about principles?
Aligned with major global frameworks, UN Global Compact, SDGs, TCFD, GRI standards, etc.
And policies.
Detailed policy structure covering environment, climate, water, biodiversity, social, human rights, CSR, health and safety, and governance, board diversity, anti-corruption.
Did they list specific commitments?
They did. Key ones include aiming for no net loss to biodiversity, becoming net water positive.
Net water positive. Interesting.
Becoming a UNGC signatory, making airports and data centers operationally net zero by 2029 and 2030, respectively.
Ambitious targets.
Also creating shared value for communities and achieving zero harm in operations. They stress it's backed by an assurance program.
And linked to the UN Sustainable Development Goals.
Yes, they list adopted SDGs and give examples of initiatives tied to things like poverty reduction, clean energy, climate action, infrastructure, etc.
Seems comprehensive on paper.
It indicates a significant formal commitment, yes. Setting targets is key.
How about the governance structure itself?
They highlight key aspects.
Yeah.
Board independence and diversity, dedicated committees like CSR and risk management.
Audit oversight.
Yes, including statutory auditors named as Mrs. Shadandharia & Co. LLP. Also, clear policies for related party transactions, requiring audit committee review and shareholder approval above certain thresholds.
Important for transparency.
Definitely. Plus, stakeholder relations and a zero-tolerance policy on corruption and bribery, with codes of conduct.
And the structure for ESG governance.
It involves the board, specific committees like CRC and RMC, ESG heads at corporate and business unit levels, clear roles outlined for the central ESG function and the teams within each business.
So embedding it throughout the organization.
That seems to be the goal. A strong framework is crucial for implementation.
Okay, let's wrap up with the financials from the balance sheet. March 31st, 2025.
Right. Key figures show total assets increased compared to March 2024.
And total equity and liabilities.
Also up. Growth on both sides of the balance sheet.
They mentioned EPS calculation.
Yeah, noted it's based on net profit, less distributions on instruments that are entirely in the nature of equity. A technical point.
And they raised money.
Yes. Completed a QIP qualified institutional placement during the fiscal year. Raised 4,200 crore. Issued new shares, so the paid-up equity capital increased slightly.
Any other notable points from the financials?
Mention of ongoing amalgamation processes within the group. Also, some specific situations noted. Force majeure invoked by MAL, the Mumbai airport operator, due to COVID, leading to an arbitration award. And a dispute involving NAAL, the Navi Mumbai airport, over water development charges. These are noted, likely as contingent liabilities.
Potential future impacts. Got it. Cash position.
Detailed breakdown by segment for end of FY25 and FY24. Overall cash and equivalents increased.
And segment performance.
Revenue and results provided for integrated resources management, mining services, commercial mining, new energy, airport, road, and others. Comparing FY25 and FY24.
Any changes there?
They noted the power trading business is now disclosed as discontinued operations.
Okay. Any other liabilities or fundraising?
Mention of a contingent liability related to custom duty demands. They also raised funds by issuing NCDs non-convertible debentures totaling 800 crore. Secured, rated, listed ones.
And future fundraising plans.
Yes, a proposal mentioned to raise further funds up to 15,000 crore through various methods, subject to approvals, of course.
Okay, quite a lot happening financially too. Fundraising, restructuring, dealing with specific issues.
Reflects a dynamic situation. Growth requires capital, and managing complexities is part of running such a large group.
So, bringing this all together, what's the big picture from this Deep dive.
You see a hugely diverse company, still expanding, deeply rooted in infrastructure.
With that proven incubator model turning out new businesses.
Right. A major push into green hydrogen, clear tech focus across segments, and a very formalized ESG and governance framework.
And the financials show growth, active capital raising, and ongoing strategic moves.
It paints a picture of a complex, ambitious group navigating growth in critical sectors, balancing expansion with increasing focus on sustainability and governance.
A lot to keep track of. So a final thought for you, the listener. How does AEL's twin focus on infrastructure, a core need for India, and sustainability position them? Especially thinking about India's economic evolution and, well, the global shifts towards greener energy and responsible business. Something to mull over.
Definitely food for thought.
Now, before we close, a necessary disclaimer. The information provided in this deep dive is for educational purposes only and not financial advice. We are not SEBI-registered advisors. Investing in stocks carries risks, including potential loss. Consult a SEBI-registered advisor before making any investment decisions. We are not liable for any losses resulting from decisions made based on this information.